Good morning and welcome to this session, the Trade and Investment Program, brought to you by the Department of Trade and Industry and Competition. My name is John Rocha. I'm the Chief Director for Trade Invest Africa at the Department of Trade, Industry and Competition. It's a great honor to be here. Today, we are going to have a very interesting conversation with all of you, which will focus on the African Continental Free Trade Agreement, the agreement that has been described by many panelists and also those who are involved directly in the negotiations around this agreement as $1 trillion opportunity. This agreement that was signed about 2-3 years ago by the African Union and a number of its member states will bring together and create one of the largest free trade areas in the world. And to join me today to have this wonderful conversation with our live audience that is joining us from different parts of the world, I'm joined by Ms. Trudi Hartzenber, Director from the Trade Law Center based here in South Africa. She will then, I will give her an opportunity to introduce herself. I'm also joined by Mr. Kutoane, who's the Chief Executive Officer of the Export Credit Insurance Corporation of South Africa, and also Mr. Ronak Gopaldas from the, he's a political economist and also attached to the Gibbs School of Gordon Business School of Science. And I'm also joined by Ms. Gyang Demitta, who is the Head of Customs at the Africa Free Trade Continental Free Trade Agreement Secretariat based in Ghana. This is a wonderful panel. We are looking forward to a very interesting debate. To get the ball rolling, I would like to start with Ms. Demitta from the AfCFTA Secretariat, just to give us a broad overview about the AfCFTA, what its architecture is, how is the negotiations proceeding, and also views around the process of implementation of this magnificent agreement. Mr. Demitta, I hand over to you. And I know that you are joining us from Gabon, and we're happy that you have availed yourself to join us today. Thank you. Over to you, ma'am.
Yeah, good morning, distinguished organizers and participants. Just like I have been introduced, my name is Demitta Gyang. I am a senior advisor to His Excellency on Customs, as well as the head of Customs, Trade Facilitation and Transit for the AfCFTA Secretariat. Interestingly, I was part of the negotiations. I actually was the alternate chief trade negotiator for Nigeria for the phase 1 negotiations. So I have been very much part of this process. But now I am operating from the Secretariat side. Let me go straight to the subject at hand, the AfCFTA, its implementation, the preparation for the implementation. I'll give you a few highlights of where we are in terms of the deposit of instruments, which stand at 39. And then in terms of the schedules, we stand at 41. We actually have 41 countries that have deposited their schedule of tariff concessions to the Secretariat. For trading services, we also have 41 that have deposited their initial offers to the Secretariat. So that will be towards the specific commitments. And then, of course, in terms of ratification, it stands at 42, but not all are deposited. So until we receive the deposit, but in terms of those who have concluded the national processes for ratification, the number stands at 42. So in terms of that, we are doing well because besides the instrument establishing the African Union itself, this is the fastest that has been ratified by member states of the African Union, which actually demonstrates the political will by the political leaders to pursue this market integration for Africa, which has been described, like you rightly said, as this is where Africa gets it right or does not get it. You know, this is the one opportunity we have to integrate our markets and harvest the benefits of an integrated market, which ultimately is a reduction in poverty, like have been said by a World Bank study, which has been quoted so many times, that if we do implement this agreement rightly, we would be harvesting, at least taking about 30 million people out of extreme poverty, and about 70 million more out of poverty. So you're looking at about 100 million by the time we get to 2035. 2035, because the agreement itself, the schedules would only be fully implemented by 2035 because of what the modalities say, because we do have 13 years to actually bring up to 97% of products traded within the continent to zero tariffs. So, so in terms of preparation, the Secretariat has fully operationalized the institutional arrangements. So the committees are set up by the agreement. They are meeting. They've met severally. The Council of Ministers responsible for trade are set up by the agreement, have had at least 7 meetings where they have been taking decisions on the implementation of the agreement. The latest of which is the ministerial directive that we just harvested from the 7th Council of Ministers meeting, kicking off a commercially meaningful trade with the schedules that are already deposited. And what we have in the schedules that are already deposited is that we have 28 countries that their schedule is legally implementable. So trade is going to start meaningfully and commercially. It's been there, but now commercially in a meaningful way with the schedules that have been verified to meet the provisions of the modalities. So we have 28 countries whose schedules meet these prescriptions of the modalities. And so with that, what we are set to do now is to have these schedules domesticated within the national governments as is provided for in the agreement itself, so that the customs people can start using these schedules to accept the AfCFTA goods that come into their territory. And then in terms of what I handle, which is the customs, trade facilitation and transit, what we are in the process of doing, because that is the actual implementation of the agreement, is that we're in the process of harmonizing the customs processes and procedures, so that with harmonized processes and the procedures, there will be ease of movement for the goods within the continent. Because if you are moving goods within the continent and what you have to meet is a harmonized process and procedure, so that you know whether your goods are going to Malawi, whether they are going to Egypt, whether they are going to Nigeria. The processes and procedures that you have to put it through is a harmonized one, and it's the same. And then the second thing that we are working on towards making sure that the AfCFTA implementation goes seamless is that we have a drive for automation, for automating customs administrations, so that we would have first standardized data, and then we would have a digital form of communication, so that the information will speak to each other, so that the information can be gotten at the right second and time. And then with this, we are also trying to implement a tracking system, so that wherever you are in the continent, you will be able to see the goods. If you are logged into the platform that we're trying to develop, you will be able to see the goods as they are being onboarded and onboarded and wherever they are moving to. What we are also doing is with regards to this is that we also want to have a transit scheme that allows goods that once they come maybe perhaps from the port of Mombasa and they are headed to somewhere in DRC, it will be from the only checks you would have would be from the point of disembarkation to the point of exit. So from departure to exit, these goods should be able to transit through seamlessly without being subjected to checks at each without being subjected to checks at each territory that they pass through. So that's what we are doing in terms of trade facilitation. And with this, we are cooperating with a lot of organizations, those who have indicated that they are interested. And in like a week's time, I will be having a meeting of the Director Generals of Customs. And what we will be doing as part of the implementation at that meeting will be progress report on some of the things that I have just shared with you, because we also had instituted this meeting of Director Generals of Customs as the chief implementers of this agreement, that so that we are able to have them on board and then have them implementing the agreement the way it is codified within the agreement. And so also in that regard, when we bring them together, we also try to harvest the preparedness of the administrations in terms of the facilities that they have on ground, in terms of the facilities that they would require to be able to ensure that the AfCFTA goods move in a seamless way. So on the side of trade facilitation, that is what we are doing. But then, there are several other aspects of the agreement that is also ready for implementation. So you're talking about non-tariff barriers, you're talking about the standards and the phytosanitary measures, you're talking about technical barriers to trade, which we've also, of course, a monitoring system was developed for NTBs within the AfCFTA, and that has been launched fully, and it's live. And so at the Secretariat too, we have experts on these 3 areas that is also coordinating, that is also holding meetings with member states and trying to pick out aspects of the agreement, especially as it relates to harmonization too, because in that area, we have standards to harmonize. Standards, phytosanitary standards and technical standards, regulations across the continent. And so for the implementation, work is ongoing on that. One thing I did not mention about the trade facilitation, which is also somehow connected to the implementation, is the harmonized system, the coding system for customs. And where we are is that the HS 2022 will be rolled out by January. And it will be good for all customs administrations that are member states of the AfCFTA to actually be able to transpose to the HS 2022 code, because in itself, it is trade facilitated if you're speaking to the same nomenclature as the goods arrive. And so also currently there is a drive towards migrating all AfCFTA member states to HS 2022 so that we will be working from a harmonized platform. But I won't say it is without its challenges. Of course, it does have its challenges. But what we do plan and hope for at the Secretariat is that we will get there. We might not get there like within the next month, but we will get there. It is a process. It is gradual. We are putting the things in place, and then we are taking them one by one, as is in the agreement. We are taking out all the issues that the member states have come together to say these are the things that we are committed to, because that's actually what the AfCFTA agreement is all about. It's about member states coming together to agree to the rules that they would trade with. So we're picking out these rules. We are putting the implementation structure for these rules. We are operationalizing them, and hopefully in the nearest future, we will be able to get there. So thank you very much. I hope that pretty much sets the tone and the place.
Thank you.
And
No, they are where all of a sudden this lady is going to
colleague, please mute your mic, please.
Quality of the
Can I ask the technical team to ask? Thank you very much. Apologies for that. Apologies for that. Thank you, Demitta, for such a fantastic and very detailed overview. I will not waste more time. I'll now would like to bring on board Ms. Trudi Hartzenber. You have a career spanning really a number of decades around the issue of trade, not only in Southern Africa, but across the continent. And having listened to Demitta's wonderful exposition there, I would like to now bring you on board being sort of what I would call an outsider looking in. You know, we had an inside perspective, an outsider looking in. What your views are around that, and what would make the AfCFTA different, particularly to many other regional economic agreements in that space. I mean, we have had the SADC Free Trade Agreement. We have some in East Africa as well. We have had in West Africa. What makes the AfCFTA so special and unique, and why do you think that this time around it's going to succeed and it's not going to be seeing the same fate as the others? Trudi, please just start by introducing yourself briefly, some short background about yourself, and then you can delve into the questions that I've highlighted. Thank you.
Thank you so much, Don. It's a great pleasure to be here, and I'd like to thank Demitta for that insider perspective, as you say, from the hot seat of Accra, the AfCFTA Secretariat, where, of course, the negotiations now take place. John, you're asking a very important question. What indeed is going to make the AfCFTA different? And I think there are a number of issues that we've got to keep in mind. This is, in a sense, the final round of trade integration for Africa. So far, our trade integration is focused on sub-regions. We're now at the continental level. We're also embarking on this amazingly ambitious initiative at an extremely important time for Africa's development. If we take a look at the impact of COVID, we take a look at the climate crisis as we watch very closely what's happening in Glasgow at the moment with COP26, but also when we take a look at Africa's development trajectory, this very ambitious initiative comes at an incredibly critical point in time. It also comes at a time, as Demitta has reminded us, at a time where the digital transformation processes are gathering momentum, and we dare not get left behind. But let's talk a little bit about what could make this different. And it is, in some sense, a very traditional trade agreement. And as Demitta has indicated, we focus on liberalizing tariffs, taking a look at the traditional components of a trade agreement, but there are also innovative components and elements to the agreement which are really important to keep in mind. For me and the work that we do at Tralac, Tralac is a small trade capacity building organization based in Cape Town. I'm an economist by training, but I spend my days working very closely with lawyers. And the legal certainty for trade, the predictability, transparency, the improved governance that the AfCFTA can bring to trade on the continent are, for me, critically important. There's ample evidence to indicate that some of the major problems we face on the African continent relate to our lack of capacity and diversity in terms of that capacity to produce tradable goods and services competitively. I think this is a critical point. The second point is that primary impediments to intra-African trade are not necessarily tariffs, but the non-tariff issues, time spent at the border post, for example, unnecessary and very complex, cumbersome documentation requirements, many of the trade facilitation issues to which Demitta has reminded us. In fact, Tralac did a study a few years ago before the negotiations began, and we simulated a situation where there were no tariffs on trade, on intra-Africa trade at all, and compared that with improvements in transit time. Transit time, time on the road, because most intra-Africa trade goes by road, about 90% of intra-Africa trade is transported by road, and time at the border post, which really is a proxy for trade facilitation or trade impediments and frustration. What we came up with was eye-opening, but has subsequently been confirmed by many studies, the IMF, the World Bank, and many others. And that was, our conclusion was that a 20% improvement in transit time would bring greater benefits, welfare benefits, than eliminating tariffs on trade completely. It confirms how important non-tariff barriers are, how important trade facilitation is, reducing the paperwork, taking a look at the significant opportunities that we have to digitize trade facilitation processes. So for me, I think the improvements in trade governance associated with the trade facilitation value chain, right from the farm gate or the factory gate, where we need standards of compliance, certificates to testify to particular qualities of the product to ensure human, plant, animal safety and protection of the environment, increasingly important as we get our goods to the border post, where all of that compliance is checked. Important challenges that we can now take away from the border post. Keep in mind that there are 4 different annexes to the Trade and Goods Protocol that deal with trade facilitation issues. It indicates the emphasis and the importance that has been allocated to this. But there are foundational requirements which are necessary if this is going to work well. Some are beyond the scope of the AfCFTA: energy security, digitization, processes, access to equipment, to data, connectivity are prerequisites for the effective digitization of our trade policy processes. I also want to focus very quickly on trade and services, John, because if we look at the continent, more than 50% of the continental GDP is made up of services sectors. And trade and services, although starting from a fairly low base, is increasing very rapidly, both formal trade and also small scale or perhaps informal cross-border trade. But trade and services is integral to trade facilitation. Transport, communication, financial services are essential for trade and goods to succeed across borders without impediments and to reduce the transaction costs of trade. But what are we focusing on in the trade and services agenda? And it's the regulatory issues that matter. Now we have on our agenda the development of frameworks for regulatory cooperation. Cooperation is a word that features quite prominently in a number of contexts of the agreement. I would hope and prompt and encourage our negotiators, our state parties, to move towards regulatory harmonization, because it's only once we harmonize regulations that we will see the efficiency gains, not only for trade and services, but also in terms of trade and services playing a role for trade and goods. So this can open up significant opportunities. This will also be particularly important in our post-COVID recovery, transformation, and resilience in the face of future pandemics that may come our way. I also want to emphasize some of the work in progress. Some of it is in early days. If we take a look at phase 2 and phase 3 of the negotiations, we see emphasis on investment and John, ladies and gentlemen, very important, is the attraction of FDI from beyond the continent. What the AfCFTA has done, even before we start trading, is to assist to generate significant interest in the potential of Africa, of the development of African markets, of the unique opportunities for business development and the location of commercial presence for international investors. We're going to need that investment. Keep in mind that when a foreign investor locates, for example, in Ghana, one of the state parties, of course, that investor then becomes eligible for all the benefits of the AfCFTA. So this, for me, is really, really important. The investment is necessary to diversify and develop our productive capacity. Absolutely critical, excuse me, for the success of the AfCFTA. But equally important are the phase 3 issues: e-commerce, protocol on women. John, this is absolutely critical. It's not only an issue of economic justice, it's an absolutely pragmatic economic imperative. More than half of our population is female. We have an incredibly young population. So the protocol on youth is absolutely critical. And there is also a focus on SME development. These have not been negotiated yet, and the time is now to take the opportunity to influence and shape those agendas so that they together form a compact, a development supporting and enhancing African Continental Free Trade Area. Once all of these elements are fully implemented, and that's a big job because the implementation takes place at national level. Once it is fully implemented, the opportunities for investors, producers, traders, for the African continent to develop, sustainably develop, is certainly extremely important. Thank you so much.
Thank you very much, Trudi. And I think you have highlighted a couple of very salient points, not only around the innovative components that the AfCFTA brings to the table. I think you also touched on the need to enhance Africa's productive capacity, because that's a key factor to enable higher levels of intra-Africa trade. You raise points around the significant impact, negative impact that border delays have, considering that a lot of intra-Africa trade is still transported via roads, and other technical issues that you raise. And I think I'm very delighted that you also brought the issue of services, which you oftentimes seem to forget. If we look at the value of services that Africa is currently importing from other parts of the world, it's in the range of about or above $150 billion annually. So it's quite a significant amount. But we will come back to some of the points that you raised later on. Let me just proceed with Ronak. Ronak, you have a background in country risks and having worked also for a commercial bank in the past. If I were to ask you to put on that hat, but also your hat currently working as an academician, as a speaker on many of these issues, what are some of the insights that you can share with us, particularly pertaining to risk, but also what are some of the good things if you are a commercial enterprise, be it a financial institutions, that the AfCFTA brings to the fore? Over to you, Ronak.
Great, thanks, John. Good to be with you guys today. I'm going to take a slightly different approach to some of the other panelists and focus more on context and big picture stuff and some of the trends and themes in relation to the AfCFTA. As you mentioned, my background is as a political economist. I had a career in banking. Now I go by the title of corporate sangoma, and I try and help folks predict trends and themes and to help them make better investment decisions. So I think, it's been 2 years since I was last in Dubai, and a lot's happened in that period. It's a pity we can't meet in person, but I think, as the worst of the pandemic seems to be subsiding and we start to see green shoots of recovery, there are some positive signs, and hopefully we'll be able to do it in person soon, but there's still a lot of uncertainty to navigate. And really the last 18 months or so have been like a year out of a Quentin Tarantino movie, full of unexpected shocks and surprises and twists and turns. And I want to kind of take a step back and try to make sense of things, to understand the impact of the pandemic on the global economy and the political architecture on the continent, and how the AfCFTA fits into what comes next. So I think let's start with the first question around the changes to the global political economic architecture. And I think we need to really appreciate over here the magnitude of what's happened. We have not had a public emergency like this since the end of World War II. We had economic depression conditions similar to 1929. You had a contest and a clash between liberal and authoritarian values coming out last year. And then with the wave of anti-racism protests in the wake of George Floyd's killing, as well as a climate emergency, you really had the intersection of multiple crises happening simultaneously. And that led to, I think, a big political moment. And that was significant. And the last time something like this happened was in 1989, 1990, where you had a sequence of events that really changed the trajectory of the world. You had Tiananmen Square, the falling of the Berlin Wall, the release of Nelson Mandela from jail, and that marked an inflection point, really the unraveling of the Cold War ideology and architecture. And I think that really set in motion the Washington Consensus, the era of globalization, capitalism, and democratization, which was punctured in 2008 after the crisis. What we had was austerity and quantitative easing. But now, fast forward to 2020, and I think what we saw again was another ideological reset. And the zeitgeist has shifted to an era of more nationalism, more isolationism, and more authoritarianism. And I think the allure of the Washington Consensus had faded, and we are moving now into an era of bigger state, bigger debt, and bigger entitlements. And I think it's important to pause and ask the question, what does this all mean? I think it's quite paradoxical, because I think the role of the state has become very important in the post-COVID era. The state has needed to have greater reach and relevance in response to this public health emergency. But at the same time, the shortcomings of the state from a governance perspective have also been exposed in many parts of the world. And I think this is the realization that the state can be both the problem and the solution simultaneously. And all around the world in societies, the social contract is being rethought. And as we know with social contracts, that they're either rejected, rewritten, or recalibrated. So I think from a global perspective, that's the first point to note, is that we've seen fundamental and big changes in the world, and we're in a new era. Now, obviously, from an African perspective, we need to ask the question, what does this mean? And I think the pandemic in many ways is an inflection point for the continent, because it could be a catalyst for a really meaningful transformation, or we could become even more of a laggard continent. And to put it very crudely, we have now an opportunity to positively disrupt ourselves in the face of these challenges, or to continue as we have been doing. And we need to understand that our population will double by 2050. And unless we do something dramatic, this is going to create significant pressure on our resources, particularly with our young population and the levels of urbanization that we're seeing. So, we can either be victims or victors, but we have to make a set of choices. Otherwise, it's going to be very tricky. So in this context, I think there are 5 critical relationships that all countries across the continent are going to need to navigate really well. So number 1 is the economic relationship between the state and its creditors. The second is the political relationship between the state and its citizens. The third is the geopolitical relationship between the state and international partners. From a security perspective, the state and non-state actors, and then of course the state and the private sector from a business perspective. And I want to hone in on a couple of these. So I think, if we look back at the outlook last year for the continent economically, it was terrible. I mean, there's no other way to say it. It was a perfect storm. We had real and financial shocks occurring simultaneously, and the continent experienced its first recession in 25 years. FDI globally hit record lows, and the continent was really hit by what I call the 3 C's. So that's COVID, commodity prices, and capital flight. And countries with already weak governance and weak balance sheets were really, really hammered. And I think that culminated, as we saw, in the default of Zambia last year. Fast forward to 2021, and the three themes, I think, have been the 3 Ds, which is debt, disease, and dysfunction. And that's what we're navigating at the moment. Of course, there are green shoots and the signs of recovery, and I think that's largely as a result of vaccine economics. The global recovery is picking up steam. Global monetary and fiscal conditions are extremely supportive of risk assets. We've also seen a significant uptick in commodity prices, and given these factors, the outlook is a bit more positive for the continent, particularly for the commodity exporters. In addition to the recovery of global trade and global demand, largely driven by China and the US, I think growth on the continent should average around 3.4%. This is still below global growth of 6% in 2021. But slightly more optimistic than last year. But of course, this is really contingent on the global story, and in Africa's case in particular, at the speed at which vaccinations can happen. And I think this vaccine diplomacy story is one that's not going away. Obviously there's big geopolitical competition for vaccine access, and unfortunately, Africa, with under 3% of global cases and under 4% of global deaths, has received less than 3% of the global vaccine supply, which is creating perceptions of vaccine apartheid. As we know, we need to vaccinate 780 million people to achieve 60% herd immunity. So that's around 1.5 billion doses and a cost of $10 billion US. Most countries have put their eggs in the COVAX basket, but that's been a bit disappointing, which is now creating competition between the likes of Russia, China, India. Western countries have been criticized for prioritizing profits over people and hoarding. And I think the reality is that unless Africa gets access to vaccines and unless we're able to participate in the global recovery, we're going to remain locked out of economic activity. So this is a really, really important area that we need to navigate, and something I think from a soft power perspective that has the ability to really redraw power alliances on the continent. So, taken together, what does all of this mean? I think the message through the pandemic has been loud and clear that Africa is on its own. It should not expect anything from the rest of the world, particularly in this context of nationalism, of protectionism, of isolationism. And I think the onus then is on us to be smarter and to hack the ladder, because we can't continue to do things the way that we always have done in the face of our challenges. To put it in context, we're dealing with a pandemic, we're dealing with premature industrialization, we've got climate issues to contend with, and the continent is being asked to democratize and industrialize simultaneously, which is something that has not happened elsewhere in the world. So we need to think smart in order to move quickly, to accelerate success, and to achieve the outcomes and the prosperity that we need. And I think for me, in that context, this is where the Continental Free Trade Agreement becomes extremely important. I think the things that we need to prioritize are obviously integration, innovation, and industrialization. And I think what we've seen coming out of the pandemic is that things like digitization, localization, and industrialization, which are all themes that fall very, very neatly into the Continental Free Trade Agreement, have become very important. So I think looking at the integration theme, I think it's pretty obvious that, as a collection of fragmented states, we don't really have economic muscle or power. So we need to scale, and we need to do that by integrating. Only by doing that do we leverage our population size, our resources, our labor force, and do we become too big to ignore? And I think the AfCFTA gives us huge political and economic leverage. The size and the scale, as has been mentioned, is huge. This is going to be a market that's the biggest free trade area in the world. It's a market bigger than India. And I don't care what kind of investor you are, that's simply too big to ignore. Secondly, it's got political momentum, even through the pandemic, where a lot could have gone wrong. I think the various agencies and leadership maintained some positive direction over there. And then, of course, it's an African solution to an African problem, which I think in the context of what's happening globally where the message is very, very clear that we need to bet on ourselves becomes very important. Of course, it's not a silver bullet, it's very aspirational and progress will be incremental, but I think the exciting bit for investors and businesses is that the opportunities are huge. And I think in that context, it's also important to explore some of the areas that we can be creative and innovative and we can use the AfCFTA. I think, I've come up with this concept of a technicolor economy, which looks at the blue economy, which is Africa's maritime and oceans economy, the green economy, renewables and agriculture, the gray economy, which is the informal economy, the purple economy, which is the creative arts and entertainment economy, and then the flat white economy, which is obviously the digital economy. And I think, if we can really channel our efforts, energy, and attention towards, doing the basics around the AfCFTA, I think there's significant upside. I think this can be a catalyst. And I think given the external context and the domestic context, I think the message really is loud and clear that Africa does need to bet on itself. And I think I'll leave it there for now. John, you're on mute.
Sorry, thank you very much, Ronak. My apologies. Just 3 key points that I want to highlight from your brief summary or discussion is number one, that the AfCFTA happens at a moment where there are also changes happening internationally, globally, some of which may be positive and others negative, but in essence, they also offer opportunities for Africa to leapfrog, to move forward fast under the AfCFTA umbrella, if we are able to capitalize on the opportunities that it presents. Number two, what I also found interesting was the 5 critical relationships that you outlined, economic relations, the states versus the citizens versus the international partners versus 9 state actors and also versus the private sector. And I think these are all critical elements. Our minister normally talks about a whole of government approach and also public-private partnerships. How do we leverage that to advance and support the implementation of the AfCFTA? And the last point that I found very interesting is the question of scale. Has Africa reached a point where we can describe it as too big to fail or to be allowed to be ignored? And if yes, how do we ensure that it stays that way? And if not, what do we need to do to ensure that Africa gets to that point where it can no longer be ignored? And we believe the AfCFTA perhaps gives us that opportunity. Our last panelist is Dr. Kutoane. Kutoane is the CEO of the Export Credit Insurance Corporation. It's an agency of the DTIC. Coming from a financial services organization, trade cannot happen without finances. And I have 3 points that I would like you to please just share with us your insights. The first one is in terms of opportunities. How does the financial services sector, and in this instance, perhaps even your own particular institution, see the opportunities that the AfCFTA bring? Number 2, what are some of the major challenges that still remain prevalent across the continent in the financial services sector that need to be tackled and addressed in order to allow the AfCFTA to be successful? And number 3, what are some of the practical solutions that the financial services sector may be discussing or talking about in order to capitalize on the opportunity that the AfCFTA offers? So as with the other panelists, just start with a brief introduction of yourself, followed by the organization that you represent, and then you can proceed to address some of the points that I raised. Thank you very much.
Thank you, John, and greetings to all the attendees and the participants in this August exhibition. As you have said, yes, I have been leading the Export Credit Insurance Corporation of South Africa since 2013. And just by way of background, ECIC, as we call it, is the official ECA or Export Credit Agency of the Republic of South Africa under the auspices of the Department of Trade, Industry and Competition. We were founded in 2001 to facilitate, with a mandate to facilitate the South African export trade by way of underwriting bank credit or bank loans, which support export initially then of capital, goods and services, and also support a cross-border investment by South Africans into the rest of the continent. Obviously, as all ECAs worldwide, we enjoy a full backing of the South African sovereign in underwriting these huge, sometimes very huge loans. However, we operate on a commercially sustainable basis, not having to get any allocations from the South African fiscus. We have managed to underwrite some of the huge projects that have taken place on the continent across the spectrum: infrastructure, energy, mining, manufacturing, etc., and many other related services, purely on our own balance sheet strength. Very strict capital management that we employ as an insurer, and in short, we operate more as a private sector insurance organization, albeit purely with the policy, the public policy mandate. As you have said, we provide risk solutions, and I'll just explain what that means. We are very much aware that, and I think all participants will be quite aware with this, that for any meaningful trade to take place, it has to be financed. And financing, all financiers, be it development institutions, development finance institutions, commercial banks, they always look at what kind of risks do you face when you start cross-border trade. And these are many risks indeed. While we are very excited and we are very much alive to the fact that the AfCFTA will be providing more of a standardized, harmonized processes, procedures to undertake meaningful trade, and will be sort of integral to the intra-Africa trade, which is really the key, one of the key objectives, and being very much alive to the benefits and efficiencies, trade efficiencies or gains from trade that this will be able to provide. We are also very much, and this is why most of the time we keep on advising from our side of South Africa that we should not really regard AfCFTA as a silver bullet, as my previous speaker has said. It does not provide a purport to eliminate completely the risks associated with cross-border trade and investments. There will always be residual risk in this manner. And while the mechanisms of the AfCFTA will reduce a lot of the risks that are associated, as we have had, with non-tariff barriers, etc., but it is not going to eliminate risks such as political risk that will still be haunting anybody else that is doing investments in other countries, where there will be local laws that sometimes you need to understand. There will be regulations that you have to understand. Countries are not developing at the same time. Many risks have been highlighted, which are likely to impact any trade that people are trying to have. We can, in terms of where ECIC is standing, we deal with issues like, protracted default risk, associated with, say, for instance, currency non-convertibility and transferability risks. We talk about sometimes adverse unilateral action by host governments against investments that are taking place from other countries. We talk about the failure of the host country to honor certain contracts. Some of the risks that are associated here are sovereign defaults. We have spoken about the issues around Zambia default. I think the major problem also is that, I mean, when you start accumulating high public debt, this limits your borrowing capacity as a country or as a government of the country. And therefore, once this happens, it becomes very difficult to attract necessary financing for meaningful trade to take place between your country and the rest of the world. So in this instance also, we identify those as major risks that, I mean, may actually sort of inhibit South African exporters or traders to take advantage of the AfCFTA trade mechanisms. Civil unrest in other countries, we have had 4 coups probably in the past 18 months. This do not bode well for traders. Therefore, our role as CCIC is to try and manage that risk on behalf of our clients by providing commercial and political risk insurance. And how we do this, we do it by backing the bank loans, either going directly to finance the buyer of South African goods and services, or the exporter wanting to advance credit on behalf of their customers in another country, as well as providing the facilities that enable trade to take place, such as advance payment guarantees, bid bonds, performance guarantees, etc., etc. Those are also in the ballpark of the instruments that we use. I mean, I think you had actually said I must talk more about the instruments. We have three key instruments that we use, which is export credit insurance, foreign investment insurance, and the bonding insurance. In terms of export credit insurance, we provide buyer's credit insurance, which basically is an insurance that guarantees or that ensure that banks can advance credit to the buyer of South African goods and services in foreign countries. And these are initiated through the bank mechanisms where the South African banks then advances the loan to the buyer on behalf of the exporter, and then the exporter is able to have that security that, I mean, the goods that they are producing will be funded. Then there is supplier credit, where the South African exporter wants to advance credit terms to their buyers on a long-term basis, and therefore would benefit from a cover that protect them against say insolvencies of the buyer, or the inability of the buyer to perform in terms of the contract because of all these political and country risks that I have mentioned. Then you have the foreign investment insurance, very important. Here we cover equity investment by South African investor in foreign countries, and we also provide cover for shareholder loans, as well as dividends repatriation, or ensuring that dividends can be repatriated. As I've said, that we are continuously trying to improve how we can best facilitate South African exporters to gain maximum benefits out of the mechanisms that are being presented to us, or this platform that we are talking about. We have been working very closely with other institutions on the continent, the likes of AfCFTA, where pursuant to us obtaining shareholding in the bank in 2017, we have been able to launch the South Africa Trade and Investment Program to the value of $1 billion, which has worked very well. To date, we have actually disbursed close to the total amount, which is effectively, or at least committed up to the total amount of $1 billion. And we are hoping that we are going to continue with this program going forward. I must also say that, I mean, it has been very insightful from the Minister of Trade, Industry and Competition in South Africa, Minister Ibrahim Patel, to extend or expand the mandate of ECIC so that we can provide much more targeted support to support South Africa's priority sectors, which have been identified in our sectoral master plans, spearheaded also by the DTIC. And these are not necessarily programs that will be in line with our original mandate of capital goods and services, but also will include some short-term trade finance facilitation, basically by way of providing insurance for short-term trade. We have, in this manner of speaking, utilizing the experience we have had so far on the continent, as well in financing these various projects across many countries. And we are saying that, I mean, we are going to build on that skill and knowledge and expertise in that area, while aware that, you know, this short-term trade is not really our mantra. We have not really been part of this since our formation. We are going to do this in a very innovative way of working with the existing short-term insurance providers, as well as a banking industry, to launch on or leverage from their own systems in order to do this. Focus here is going to be on the SME, especially, as you have said, the women-led small and medium exporters will be benefiting mostly from the initiatives that we are currently implementing. I will probably later on have more to say about how this program is likely to work as we implement. Thanks, John. I think I will pause there.
Thank you very much, sir, for sharing your insights and the points you raise around the risks associated with trading or even investing in the continent, and the work that your organization does to mitigate those risks. Because oftentimes it's something that we do forget, that in every action there is always a risk associated with it. But we are glad that from a South African perspective, and I believe also other parts of the continent, there are instruments being put in place to help mitigate those risks. And the last point is really also on the question of collaboration. When we look at just the dimension of the opportunity across the continent, it will require significant collaboration, not just between South African, but also between all the African countries, to ensure that the financing instruments and support to materialize the AfCFTA is put behind every initiative. I want to go back to Demitta. I hope she's still in with us. Demitta, one of the critical questions that is always asked, and I will ask these questions and give you around 2 minutes each just to answer this point, is around the point that the RECs, the regional economic communities, are considered to be the building blocks for the implementation of the AfCFTA. The questions I often get in interacting with many in the private sector: what does this really mean? And how does, for example, a South African company wanting to trade with, say, with another AfCFTA country, say, for example, Zambia, how would that work? Would they trade under the Sadc Free Trade Agreement, or would they trade under the AfCFTA? If you could just clarify that point, and perhaps I'll allow anybody in the panel to answer that question as well, if you have an input, and then we'll move to the next question. Demitta, over to you.
Okay, I hope you can hear me clearly.
Please do go ahead.
Okay. So, you know, the agreement itself, based on the principle of international law, a letter agreement does not counsel, let me use that word for lack of a better word, I'm not a lawyer, an agreement that you have entered previously. So in this instance, the RECs are already there. The RECs already have their rules. The article in the AfCFTA agreement specifies that the AfCFTA by no means overturns this, right? And that where RECs have achieved a deeper level of integration, they are not expected to roll that back to because of the AfCFTA. So, for instance, let me take you to ECOWAS. ECOWAS has liberalized 100%, because in ECOWAS, you just have free movement of goods and services. So every good that is manufactured in the ECOWAS region that meets the rules of all region can circulate freely. So ECOWAS trading within itself would automatically have to apply this rule. So goods that meet their rules of origin will circulate within ECOWAS, 100%. Remember, in AfCFTA, all we have done is 90% for now, within the next 5 years. And then eventually by 13 years, we would have done 97. So for a REC that is already trading at 100%, that trade continues with a 100% regime. Eventually, when we get to 97% of AfCFTA goods, it will be expected that we maintain this level of liberalization. But of course, not taking away the 3% that is still under exclusion. Now, to go to your question directly, so this is the agreement. This is what is stated in the agreement. The AfCFTA by no means overturns what is in the regs. And what is in the regs, as a matter of fact, if you also recall that the regs are the building blocks of the AfCFTA. So for now, whatever is in the regs is what will be is still being used. To the extent that the AfCFTA, to the extent of AfCFTA implementation. So, for instance, I explained to you, we have 28 countries that have legally implementable schedules. The rest are still trading. And for those of them that are in regional economic communities, they are trading within the rules of the regional economic community. And if they are to now trade with the other AfCFTA, parties, they will trade based on the rules that are already existent within the regs. So if South Africa is right now importing into ECOWAS, what would be expected to the extent to which ECOWAS schedule is legally implementable, they will trade within that regime. But to the extent that, I'm giving you an instance, that if ECOWAS schedule is not implementable, then they will trade with ECOWAS based on whatever the regional rules had been. But suffice it to say that ECOWAS, the 15 countries plus Mauritania, that their schedules are part of the ones that have been verified and are legally implementable. So I just use that as an example. Does that answer your question?
Yes, thank you. I think I'll leave that to the audience because that's a question that really comes up quite often. And I'm glad that you have done a good attempt to clarify it. I think it's a question of then explaining on what the practical realities of that are and how it can work, which I think is important, particularly for businesses who are trading not just within the different regional blocks, but also across the continent. And there is need to shed some more light in that regard and how we do trade. So if I put you the question differently before I move on to the others, if I'm a company trading in product X within my region under the regional blocks conditions, and I now want to trade with ECOWAS, who has liberalized 100%, does it mean that my country of origin will have to strike some agreement with ECOWAS countries in order to be granted some preferential access to their market under the regime of that particular regional bloc? That's what I wanted to know, so that issue is then put aside. Yes.
Okay. Okay. So then that's really pretty straightforward, right? What we have is a free trade area. We don't have a customs union, right? Remember, ECOWAS is a customs union. So what we have is a free trade area. Okay. And because what we have is a free trade area, your company is SADC will trade with ECOWAS to the extent that the AfCFTA rules can be applied. But if it goes outside what the AfCFTA rules are, they would have to trade with ECOWAS based on their REC rules. Yeah.
No, thank you. That really answers the point. Let me move on. Not really. Thank you, Demitta. I think we can. I'll move on to the next question with Trudi. Trudi, your organization has done significant studies on intra-Africa trade, the trends thereof. In your view, based on the knowledge and the research you have done, how will the AfCFTA affect change for the good or for the better, the numbers? And I'm looking really at the numbers, because we always hear that the implementation of the AfCFTA is going to contribute to a 50% growth in intra-Africa trade. But being a specialist, you have done a lot of work in this area. You've spoken to all the players, you've spoken to government, you've spoken to NGOs, you've spoken to businesses. What do you see? What do you see, and what must we do to really materialize these huge targets and these huge numbers that we are all talking about?
John, thank you so much. And to some extent, your question relates to your question to Demitta. If we look at intra-Africa trade, it is relatively low compared to other integrated regions across the globe. And it was quite interesting for 2020, we saw a slight tick up in intra-Africa trade, not so much because intra-Africa trade increased, but because our trade with the rest of the world took a dive initially as a result of decreased demand, particularly for some of our commodities going to some of the countries that were really hard hit by COVID in the initial stages. One thing that we've got to keep in mind, if we look at intra-Africa trade, it's highly concentrated, and that's no surprise at all within the regional economic communities. That aside, if we look at regional economic communities, they are much more than trade arrangements. Indeed, in fact, some regional economic communities don't have free trade areas yet. So if we look at the Arab Maghreb Union, IGAD, and a number of others, they've got no trade arrangements just yet. In some cases within the RECs, not all the REC members are a member of the free trade area. So in the case of SADC, we've got 3 members of SADC that are not yet in the FTA. So there are a number of complications. But that said, the bottom line is within the regional economic communities, we have long-standing trade relationships. And so we have a depth of intra-regional trade existing already. So a country like South Africa trades mostly within SACU, the customs union, with countries like Namibia and Botswana until very recently, pre-COVID, being among its top 10 global trade partners. Tiny countries with populations less than 3 million. So you can understand that trade integration runs very, very deep, both for goods and for services, let that be said as well. South Africa also trades significantly with the Southern African Development Community. What the AfCFTA will do is to open up and liberalize trade amongst those countries that are currently trading under the rules of the WTO. And that means there's significant scope, for example, between some of the big players to increase trade. So for example, South Africa and Nigeria, South Africa, Morocco, Tunisia, Egypt, and so on. So there's enormous trade potential between the member states of the African Union that have now become state parties to the AfCFTA. However, John, and I think this is really important to keep in mind, many of the barriers that are particularly pernicious in terms of impacting trade, for example, between South Africa and Nigeria, are not necessarily tariffs. It's the distance, transport costs, and very importantly, as Demitta has also indicated, and Kutoane mentioned this, and I think it's absolutely critical, it's domestic regulation. So if, for example, we want to export beverages to a certain country, they may have domestic regulation related to bottling. Bottling needs to take place in that economy. And there are environmental considerations, but also job creation, industrial development imperatives that play into that. So I think we've got to put all of this on the table when we take a look at, can the AfCFTA change the dynamics of intra-regional trade and really promote intra-regional trade? There are certain types of trade, John, to be honest, that whether we've got a trade agreement or not doesn't matter. And these are fuels, for example, petroleum and so on. But hopefully over time, we're going to see changes as we move to renewable energy and really vitalize that domestic energy generation industry across the continent. So there is significant potential within the AfCFTA amongst those countries that are trading under WTO tariffs at the moment. But I want to emphasize, in many cases, it'll be the non-tariff issues, cost of transport, transport routes, and those regulations which are the real challenges. And this again makes the AfCFTA non-tariff agenda all the more important. But equally, we have to recognize that the AfCFTA is also a flagship project of the African Union, and there are other flagship projects which are designed to address some of those areas like infrastructure, industrial development, agricultural development, and sector development strategies, the pharmaceutical sector development. And I think, as Ronak mentioned, access to pharmaceuticals, COVID-related medical equipment and drugs and so on, and vaccines, extremely important, but there are sector plans to develop that capacity. So it comes back to my point about developing our productive capacity. And herein lies a bit of a rub, because we are all wanting to develop and diversify our productive capacity. We want to industrialize, or in the case of some countries like South Africa and Zimbabwe, we've got to reindustrialize because we lost significant productive capacity. And that prompts, to some extent, a protectionist stance. So we want to industrialize behind protection. We don't want to invite import competition into our domestic market. So that brings a tension in the trade liberalization and industrial development imperative. But what is happening, John, and I think this is very positive, in recent discussions related to the tariff and rules of origin negotiations, we're starting to see explicit reference to regional value chain developments. And the ones that I've noted, and there may be more, Demitta may be able to share with us, are the automotive sector and clothing and textile, two key sectors in the industrialization strategy of many African countries. Now, when we start taking a global perspective in a continental context, in other words, an African perspective as far as value chain development is concerned, then we start taking a different perspective. Because if I want to produce components for the automotive sector, I may well need inputs from somewhere else. So the protectionist imperative will be weakened because I need to import to be able to export competitively and effectively. So once we start looking at industrialization as a continental endeavor, with obviously key interests of the member states who want to promote their industrial development, finding that balance will be important. But then we start looking at regional integration differently. Now, industrial development has come onto the REC development agendas since about 2013, 14, 15. We've seen SADC industrialization strategy and many other RECs as well. So this is not new, but it has to be brought together with the AfCFTA, both as a free trade area and also as a flagship project. Finally, just picking up on the point that Demitta made about the existence of the RECs going forward, many of them bring together very rich and deep integration agendas. And very importantly, in the time we are in, John, they have on their agenda issues such as peace and security. And this, together with trade, has to be a very important focus of our discussion as well. Peace and security, stability, absolutely critical for cross-border trade to thrive, for the AfCFTA to achieve its full potential. Thanks so much.
Thanks, Trudi. And I will not even endeavor to try and summarize the points that you raised, all extremely valid. I just want to go to Ronak, because in his opening remarks, he alluded to the 5 critical relationships that you mentioned. You also mentioned some of the economic streams, so if I may call it that, that you feel are critical. I wanted you to unpack that a little bit more, considering all the points that have been mentioned beforehand. In particularly, how do you see us really getting the state governments, agencies in the public sector, and the wider population really cohering to support the implementation of the AfCFTA in practical terms? Because what is very, very clear here is that unless, let me put it this way, governments seem to be putting together an umbrella under which, or a framework under which all the different actors are expected to operate, including the rules of the game and so forth. But there needs to be a well-organized, coordinated process to bring these parties on board. Not only once the agreements are fully concluded and implementable, but even now, so that they become more active in that process as well, because governments by themselves will only be able to do so much, and we need to mobilize the whole of society, and also not even forgetting the role of international development partners. How do they contribute to the meaningful implementation of the AfCFTA? Obviously, still respecting the fact that Africa has to be in the driving seat for that to be materialized. Ronak.
Yeah, that's a really good question, John. I think, you know, the challenge with this is that because it's so big and it's all encompassing, you know, it can be quite overwhelming at times for a lot of players. You know, a lot of the clients that I speak to in the private sector are interested and intrigued by the AfCFTA, but don't always know where to start. And I think this is the challenge. You know, we're building the wings of the plane as we're flying it because we don't have the luxury of time. So I think that's the first point to note. And the only way that that gets resolved is by bringing everyone into the same room and aligning agendas, because this, in theory, should be a win-win solution for all parties. The private sector have a very, very important role to play, not only from an advocacy and lobbying perspective, but also it's simply a bigger market for them to achieve economies of scale, to grow. You know, if you look at the fundamentals across Africa, young populations, increasing urbanization, consumer class, e-commerce, fintech, the opportunity set is massive. And obviously, if you can start to achieve scale regionally, this is very attractive. So that public-private partnership, I think, along with civil society and labor, becomes the overarching thing to navigate. And I think, you know, this is where consensus and dialogue and building that social contract around what this means becomes important. And to extend that further, I think there are three fundamental tensions that really need to be resolved over the long term. So, and you know, we can draw on the experiences from Europe in this regard. So I think, you know, what's quite clear is that, you know, you don't want a situation where you've got disproportionate benefits, where it's only the big economies benefiting at the expense of the smaller ones. So you need to guarantee a kind of safety net over there so that, you know, in many instances where the only revenue line is these tariffs, you know, smaller countries have an incentive to participate in the process, because otherwise it's going to engender greater inequality. So the differential between the big and the small players is the first thing. Secondly, as I mentioned, you know, you've got this Pan-African agenda, but then you've got nationalism, which is a global issue, but also quite prevalent in a number of countries on the continent, you know, where protectionist, isolationist, nationalist impulses are the order of the day, particularly in and around election cycles, where, you know, politicians are often, you know, vying for the short-term election results, and that nationalistic drum is an easy one to beat. So this involves some level of sacrifice and some kind of visionary leadership to kind of see the bigger picture. So I think that's the other issue to resolve. And then I think the third one is that, you know, the technocrats get it. People like us sitting here get it. But the man on the street needs to materially understand how this is going to improve their life. And I think that's where communication, campaigning, education, getting the top down to align with the bottom up, and an integrated campaign to sell the ideas and the ideals of the AfCFTA to the general population and make it accessible and real to the man on the street becomes really, really important. I think, just to draw on the comparative example again, the European Union was forged over 40 or 50 years through crisis. So we should be under no illusions that this is going to require a lot of compromise, a lot of negotiation, a lot of horse trading. And I think the reality is that, it will be slow in parts, but if we aim for the moon and we reach the sky, then we're still making progress. And I think the low-hanging fruit, the small stuff in terms of visas, travel, cost and ease of doing business, accessibility, this stuff will have an immediate catalytic effect. And I think, just to bring it all together, I think the reality is that for the various players, we need to break this up into bite-sized chunks to make it digestible, accessible, and easy to understand. And I think this is where forums like this become important, and where the experts, the likes of Trudi and Kutoane become also very important in this regard. So yeah, hope that answers your question.
Thank you very much. And I've noted some key points you raised here. The last one around the need for compromise, negotiations and horse trading, and also some of the easy to do stuff that can already be done around visas, the cost and ease of doing business. Trudi, I recall, mentioned the problems around border delays, and which is really problematic for those of us who continue to monitor that situation. So thank you very much. Let me go to Kutoane, and then I'll raise, after Kutoane responds, a question that I would like all of you just to share your perspectives around that. Kutoane, there were two key points you mentioned in your intervention. The first one was around currency convertibility. And the other one, which I want to bring to the table, is around payment systems across the continent. Africa imports on average for the past 5 years around about $400 to $500 billion worth of goods from around the world. 16% of that is intra-Africa trade. And so one can start comparing that and looking how much money is actually flowing out of Africa and how much money is being retained within the continent. How do you think the AfCFTA would be able to help address this? Is this matter being given sufficient attention in the AfCFTA negotiations? Because we can talk about inter-Africa trade, but without money flowing, it becomes extremely difficult to realize that goal.
Thank you, John. I think you are raising very important points. The risk of currency incompatibility. You have always been trading in dollar and euro, but among ourselves, we are unable to trade in our own currencies. And indeed, the AfCFTA initiatives, we do have the Pan-African Payment Platform that we have just launched within the auspices of the AfCFTA, which was largely, which is basically hosted by African Bank. That to me is a very important initiative because it allows you now to start having a better movement of goods and services across borders, with people paying in the comfort of their own currencies without bothering about the exchange movements and how that is going to be affecting them in between the time the delivery takes place. I mean, at the time that the exporting takes place and the time that you get your delivery. Any changes in that in currency, that time can actually affect the manner in which you get paid. But this type of platforms that actually gives you instant, compatibility, basically through the mechanism of distributed ledger systems, it's very, very useful to me, and it's going to be a game changer as far as I'm concerned. Talking about, how the trade is going to happen, given that we have not really been trading amongst ourselves as we should. And there are many impediments that have been identified, which actually motivated the principals to come up with the continental free trade arrangement. And those have been amplified, and they have been canvassed at length, even through Trudi's statements earlier on, in terms of the major challenge being the non-tariff type arrangements. And I think one of the key issues that also she touched upon is a question of infrastructure, especially transport infrastructure, because that, to me, is also one of the key impediments. It's easier basically to export or to import from Europe, US, China, than to import, say, from DRC, or to export to Nigeria from South Africa. So effectively, it's because of trade routes are not well defined and they are very cumbersome. And therefore, to me, transport routes actually are trade routes. So unless we deal with our ports properly, so that our maritime transport routes are quite efficient and effective, I don't know how many African countries can actually be proud to say they own their own shipping lines. Very few can actually stay there, if any. So that's where another problem comes in. In terms of rail, how many of us have integrated rail systems? We are still battling with that, and we are hoping that some of the initiatives that have started within the African Union, priority arrangements, including Africa 2063 mission, their vision, who will be able to address, or we will be able to address some of these issues. Particularly rail. It's amazing that in South Africa, we have seen actually a retreat. We have actually seen more and more of goods actually going on the road instead of actually going on the rail. And those are the kind of issues that we should be, if we are going to be building a continent that is efficient in terms of how goods leave one country and get traded in another, then we need to address the issue of transportations in a big manner. I'll pause there, John.
Thank you, Kutoane. And I think some very interesting points around the trade routes and the question of transportation as well. Rail linkages across the continent, and when we look around the world, one of the issues oftentimes raised around Africa is that the continent is too big, the distance too much. But if we look around the world, there are corridors that also extend as far as 10,000 kilometers, and they are working optimally. So we need to learn from that. And I think that the point you're raising, Kutoane, is really calls for greater levels of collaboration between everybody else, so that those who are working on trade facilitation can then also be backed up and supported by those who are tackling the issues around the soft and hard infrastructure as well, so that sequencing those interventions will then create an enabling environment that Ronak referred to around the cost and the ease of doing business. I want to ask one question to all of you, and I'll give each one of you 1 or 2 minutes to respond. And when we started, we were alerted to the fact that there are over almost 500 people watching. Many of them are international investors or people outside and business executives outside of the African continent. What is their role? How do you see them contributing towards this? But also, what are some of the risks and challenges that it poses? And what do we tell them currently so that they can become our partners in ensuring the implementation of the AfCFTA? I'll follow in the same order, just to give you all equal rest. So I'll start with Demitta, followed by Trudi, and then Ronak, and lastly Kutoane, and then I'll come with another question. Thank you very much. Demitta.
Thank you very much, John. We need the investors like yesterday. We need investment in both hard and soft infrastructure, decision elements of the AfCFTA. We do need investment in the border posts. In some of the border posts, we had infrastructure there. In some of them, we need just soft infrastructure. In some of them, we need both hard infrastructure. And we really can't do it without private money. We
it can't just be public money anymore. We from the in terms of trade facilitation, with facilitation sector money.
Demitta, can I ask you to please switch off your camera? Hi, Demitta. Could you switch off your camera perhaps so you can give us a better quality sound? There seems to be some interruptions, if you don't mind. Perhaps let's proceed. I would like to ask our technical team just to contact her, please, and let her know to, can you try?
Hello, can you?
Yeah, we can hear you. We're just having trouble listening to you. Yes, please proceed. Okay, let's do as follow. Can I request the technical team to contact Demitta and ask her to use the same device she was using?
Sector money. We need private implementation of the AfCFTA. John, using them device. I don't know what the issue is.
No, Demitta, I'll get back to you. I'm sorry. We just having you're breaking quite often and we can't hear you talk. So I'll ask the technical team to engage you. My apologies for that to everyone and to you. But let's proceed to Trudi while we sort out that problem with Demitta, and then we'll bring her back at the end. Trudi, over to you.
Thanks so much, John. And I'd like to pick up on some of the issues that Demitta has raised. Of course, as I mentioned initially, we've seen significant interest from the global economy, global stakeholders in the AfCFTA. And that is extremely positive. So we need to take advantage of that opportunity. At Tralac, we spend quite a lot of time working with women traders. And I want to share with you some of the very positive engagement that we've had with African women diaspora and the support from women business associations across the world. And those business linkages are not only important for us to strengthen our capacity to implement and achieve the objectives of the AfCFTA, but very importantly, John, we've got to keep in mind that the AfCFTA recognizes trade agreements with third parties. It recognizes that Africa's trade with global trade partners is really, really important. The AfCFTA, if we look at the dynamic benefits, and Ronak has mentioned that these are particularly important in attracting FDI to expand and diversify our productive capacity, get the economies of scale, it stands a great opportunity to change the way we trade with the rest of the world. And I think this benefit and this connection to our global partners and stakeholders is extremely important to keep in mind. It's also important because if we look at our trade with the global economy and our global partners, then many of them are moving ahead very fast in terms of new policies, initiatives, domestic regulation to support the climate mitigation, adaptation, transformation, the transition, the green transition that we all have to work towards. In some ways, they're leading, they're ahead of us in this game. We've got a huge amount to learn from them in terms of the new standards that we will all have to comply with very, very soon in order to have sustainable economic development. But also in our stakeholder community, and I certainly hope that we have good representation here, besides the private sector, are of course our development partners. And this AfCFTA initiative, this very, very ambitious initiatives that we are busy with, offers unique opportunities for interventions which can really support Africa's sustainable development. And I think here about agriculture, I think about the services sectors, I think about the connections between those, absolutely critical. But equally important, in our governments, government agencies, we need new skills development. And this again takes us into the digital transition that we're busy with, digital transformation. It's a reality, it's not waiting for Africa. And many African countries have started adopting transformation plans, processes. We have policies and strategies at continental level as well. We're developing a digital policy for data protection across the continent as well. So there's again a lot in terms of synergies, but also in terms of support, mutually beneficial support that we can proceed with and benefit from. At the end of the day, I think the bottom line is that African countries are globally integrated, and that will continue. But if we use the AfCFTA to change the way we trade, the way we engage, the way investment comes and establishes commercial presence on the African continent as a result of governance improvements prompted in many instances, possibly by the AfCFTA, because we are pushing boundaries to have a protocol on e-commerce. That's really, really important. That's a big step forward, to have a protocol on women, on youth and SME development, and to have a protocol on investment, including very important provisions on investment facilitation. They will bring governance improvements not only for intra-Africa investment, but irrespective of where the investors come from. And I think those are extremely positive developments. So when we take a look at the AfCFTA within the context of the important developments on the continent and situate that, as Ronak has done, within the global context and start taking a look at stakeholder engagement, relationships, opportunities, they have to be mutually beneficial, respectful, and we need trust. And I think that's really important because it comes back to the foundations of improving governance relationships. I think there's enormous benefits to be had if we leverage this carefully, cautiously with our stakeholders, but keeping in mind that Africa's development is at stake here. It has to be sustainable development. And the distributional issues, I think that Ronak has mentioned too, are absolutely critical. Trade has brought many, many people out of poverty, millions across the world, but many have remained behind. And that has to change. If we're to have stability and sustainability, then the distributional effects have to be addressed on the continent and also with Africa in a global context. We have to work on that together. Thanks, John.
Thanks, Trudi. Ronak, let me go to you. I mean, when you started, you spoke about scale and too big to be ignored. As Africa reached that point, why should the international community really care, the investors? What is there for them to gain? If you could just really share your insights with us on that. Thank you.
Yeah, so I think, as I mentioned, by 2050, our population is going to double. So Africa is quite frankly too big to ignore. And you may think about these things as African problems and, a domestic issue, but the reality is that if we don't succeed on this, it's going to become the rest of the world's problem as well. And I'm talking about issues of security, of migration. Young people who don't have access to economic opportunities will join the likes of Boko Haram, Al-Shabaab, look for avenues outside of traditional economic job routes. So you've got social pressures building. Where do they go? They could go to Europe. I mean, clearly when there's strife and there's issues and there's conflict, there's a migration issue. So global powers, I think, recognize that there's a vested interest in making Africa thrive, prosper, and succeed. Also, if you look at the dynamics in places like Europe with an aging population, it's quite clear that the opportunity set is in Africa in terms of untapped potential, a lack of industrialization, working age population, and cheap labor. You can do well and you can do good as an investor on the continent. They're not mutually exclusive. And I think all of these taken together make a very compelling case. As I mentioned, the things accelerated through the pandemic as well, digitization, localization, and industrialization are all front and center of the AfCFTA. So I think and then of course, the size and the scale of it all, it's just simply going to be too big to ignore. The economic opportunity over the next couple of decades are going to be in Africa. And I think the message to international investors should be that, of course, you need to balance your risk with reward. But if you don't start to lay the groundwork now, you're going to miss an opportunity and a growth era, I think, which is, by the time you do get on, going to be, quite frankly, too big to ignore. So I think, that's not to say that there aren't risks. That's not to say that there aren't issues and that you don't need to go into this with your eyes wide open. But I think you need to be realistic. But there is, I think, certainly scope for optimism. And I think, investors and private businesses have a critical role to play in facilitating that, particularly in the infrastructure space. So I think, Demitta mentioned infrastructure. I would say hard, soft, and digital are critical to catalyzing the AfCFTA. So I think, it's easy to look at the risks, but I think the opportunity, if you put it in perspective and you contextualize it, is far more of a compelling draw card.
Thank you very much, Ronak. I'll go again to Kutoane. I mean, you spoke about collaboration, Kutoane. How do you see that unfolding in view of the AfCFTA with the international community? Are there specific opportunities, or is that matter, that door closed?
Thank you, John. I think, I completely, align myself with the previous speakers, both Trudi and Ronak, in terms of, how Africa can actually benefit from integrated world, globalized world. I think we cannot really isolate ourselves from the international business environment. Globalization, there are definitely gains from globalization. Books have been written, articles have been, debates have been held. And I think, I have on a number of occasions addressing some of the forums, international forums that I have attended. I've spoken mostly about what we see as the benefits of increased collaboration, both in terms of mobilizing pool of financing, especially to support our SME sector. We always say that our SMEs are the real lifeblood, really, of any economy. And in actual fact, in the context of the AfCFTA, the small and medium enterprises are going to be playing a much more, or expected to play a much more integrated role, because they are really drivers of trade on the economy. But if you start now bringing in the element of foreign direct investment into the continent, now you are starting to unlock even more added opportunities in terms of the value chains for our SMEs. So that kind of collaboration between the foreign investors on the continent, as well as the vibrancy of the SME sector, cannot be underestimated. In terms of collaboration across financing sources and risk management initiatives, we have already seen a lot of collaboration taking place on the export credit agency sphere. Usually, every export credit agency will be having as its central position or goal to support the local or domestic businesses to export more and more. But there was no interest in collaborating with others, because everybody else is pursuing their own competitiveness against the rest of the world. But lately, we have seen a lot of collaboration, given the capacity that one would have. If we were in South Africa, we have just done two very important projects in Ghana, where we collaborated with the Swedish Export Credit Agency. From our side, ECIC, supporting our own exporters from South Africa, while the AKN was supporting their own exporters from Sweden. So these things are really working, and we are beginning to see a lot of those happening on the continent. Because like I said, when I started that without financing, Dr. Adesina of the ADB calls the real lubricant of international trade. So without financing, really the trade would not be taking place. It's just one of those critical elements that you have to be able to harness. But then finance cannot just go alone. It has to be supported by well thought out risk mitigation strategies, the kind of the ones that the ECIC is providing. Thank you.
Thank you very much, Kutoane. Let me give, I'll now ask you to make your concluding remarks around one main issue. But I would like to give the Tina an opportunity, because Demitta an opportunity, because we couldn't hear you very well. So I think it would only be fair to give her an opportunity to make her remarks in a very short time. And then I'll give you 1 minute each, just to give your views around the role of South Africa as a champion and to support the implementation of the AfCFTA, given its capability, given its strategic geographical position or location in the continent, but also given its productive capacity and so forth, and financial services sector. What do you see specifically, and what South Africa has to offer, not just to the international community, but also to the African countries that may be listening in to capitalize on the opportunities for the AfCFTA? Demitta, please just conclude your remarks then, and then if you could answer this point around South Africa, and then we'll go through the same chain and close this session. Is Demitta online? Okay, we have 1 or 2. Okay, let me just, I see an indication from our technical team that we have questions or comments. Demitta is not online. Do we have any questions from the audience that we may answer? I cannot see anything here. Okay. Let me see here. Okay. Okay, let me read these questions and then I'll ask you to quickly just answer them. Globalization works for those who do it on their terms. Africa must do it on our terms, and soon. Otherwise, the rest of the world will trade with Africa and they will mostly benefit. So that's the first point. The second, Africa as a young population, I think that Ronak touched on it, Ronak touched on that. And then the last one, Africa is too big to ignore. I think that's a comment that Ronak also repeated.
Maybe, John, I can take the first question.
Okay.
So I think this is an important point, and I think it speaks to the issue of African agency, right? And if you look back at the Cold War and how the continent was exploited in this proxy war between two different ideologies, what we really want to avoid is a situation where that happens again. This time the powers have changed. So you've got your established powers, US, Europe, and China. And then you've got a new wave of powers who are also trying to make inroads as there's a new kind of geopolitical scramble for power and influence. Those are the likes of Turkey, India, Russia, all adding something different. And I think this is where the economic diplomacy game becomes incredibly important, because instead of accepting what they want to give us, we need to dictate the terms. And again, to my point earlier, it's only by throwing our weight around as a collective, as a holistic block, do we then start to achieve the things that we want. Otherwise, a divide and conquer strategy becomes extremely easy. So I think in this context, where from a political perspective, from an FDI perspective, from a trade perspective, where global powers are jockeying for influence with Africa, given the resources, given the human capital, given all of these factors, I think it's important that we have a very clearly defined agenda, that countries understand their comparative advantages and negotiate en masse in blocks for the big things that they want. And I think, there are a couple of countries on the continent that do this really well. Kenya is very clever at the way it plays the big powers off against each other. Mauritius has done well in terms of managing China alongside its traditional power, India, while still maintaining relations with Europe. So, I think given all of this interest, it's up to us to dictate what we want and how we want it, because these partners are very interested and will be here for the long term, given what's happening on the continent. So I agree with that. I just think we need to be savvy and smart about how we play this economic diplomacy game.
Thank you, Ronak. Let's move on to the next question. Who will be responsible for training and information on issues like rules of origin, and how easily is it available to traders as well as potential investors? Any of the panelists would like to take that question?
John, I could try to answer that one.
Thank you, Trudi.
If I could just have one sentence on the previous question, and I want to support what Ronak has said, but I also want to just underscore the point that at the moment, Africa as a continent is a commodity exporter. We've got to change what we produce. And that means industrialization has to be center stage. We've got to change the profile, how we produce the goods and services on the continent. Only then will we be able to negotiate effectively with our trade partners. At the moment, we are caught not only in rather unfortunate circumstances, we're susceptible to commodity price fluctuations, the commodity cycles, and so on. We're captive to demand from global partners for those commodities. But changing what we produce is really, really important. So industrialization, top of my list in many of these conversations. The issue about training and information, this is absolutely critical, John, and the rules of origin, which has been identified here, that's often the fine print that can make or break an agreement. It's only if, as a trader, you comply with the rules of origin that you get the benefit of the tariff preferences. And this is where we're still stuck. We've still got to negotiate about 13% of tariff line rules of origin. Where does the information and the training come from? The AfCFTA Secretariat has a mandate to support training, but it's also a responsibility of so many other organizations, government agencies, but also this is where an organization like Tralac becomes important as well. Not only Tralac, there are many, many others that are assisting with this. We're also starting to see a large number of digital platforms that provide access to this kind of technical trade information. And if I may mention one, John, if that's okay, the International Chamber of Commerce, UPS, Tralac, and other partners are collaborating on a project to support women traders in the AfCFTA. And it has a trade tools kit, if you like, where you click on a particular product or tariff code, and you get not only the applicable tariffs, but the rules of origin and any other taxes or standards that require compliance. So there are a lot of initiatives, but we need much more in the public domain, easily accessible and in non-technical terms. So accessibility is absolutely critical because a lot of these are very technical issues. Thanks so much.
Thank you. I will now give each one of the panelists 1 minute just to tell us and share with the audience how and what must we do to position South Africa to capitalize on the opportunities flowing from the AfCFTA in 1 minute, and then we will conclude. So I'll start with Kutoane, and then I'll go to Ronak and Trudi, the last one.
Thanks, John. One thing on my mind, and I'm going to be talking here in terms of financial assistance, particularly to our SME sector. I think one has identified that in actual fact, there is a big problem or a big challenge that we are having here, where banks do not understand the requirements of the SMEs in terms of enabling them to trade much more effective. And on the other side, also the SME sector do not understand in the banking sector requirements and documentation needs that have to be, it's quite a rubric of information that is required in order to be able to trade. So I think we need to start now looking at how best to aggregate SMEs to be able to bulk up their position in trading and strengthen their negotiation muscle with financial providers as well. Thank you.
Thank you very much, Ronak.
I think, John, I'd probably echo the previous point, because I think the biggest challenge at the moment is twofold. One is in, the dissemination of information and making sure that all stakeholders understand exactly what's going on and where they can play, because it's a bit too abstract at the moment, the understanding. So we need to find ways of communicating this and making it digestible and practical. So that's the first point. And then selling it, right? So, there's a vision and there's an ideal over here. We need to be realistic that it's not a magic wand to solve all our problems, but it's something to work towards. And I think, being able to sell this to the private sector, to civil society, to labor, and to the people who will materially benefit from this, I think is going to be the challenge. And we need education, information campaigns. So I think, it's about understanding that you've got this very abstract vision, which we now need to turn into reality. So the bottom line is execution, because talk is cheap and rhetoric and reality are very different.
Thank you, Ronak, for touching on that point. Trudi, your last comment.
Thanks so much. Thanks so much, John. I underscore what my colleagues have said here. I want to focus very much on South Africa's SMEs. South Africa has a strong footprint across the continent in services sectors and also in some industrial sectors, chemicals, mining related, steel and so on. But our SMEs perhaps do not yet have the opportunity to take advantage of cross-border trade opportunities. And this requires that we have a number of important initiatives: access to information, market opportunities, helping to demystify and to understand the competitive nature of trade in the new markets in North Africa, in West Africa and Central Africa. This is going to be extremely important. I would also suggest that the efforts that we have been putting in to digitize our trade management processes and to build the domestic capacity, shorten timelines to get, for example, an export permit. Sometimes during COVID, this has been about 10 working days. That's way too long under pandemic conditions. So digitization, streamlining customs border management, and I really would encourage that we work towards effectively operationalizing a single window system for customs and border management. All of our traders, SMEs and large-scale traders would benefit from that. Thanks so much.
Thank you, Trudi. Let me take this opportunity to thank all our panelists for joining us today and for your insightful thoughts and remarks during this event. I also want to thank all of those who have joined us online from different parts of the world. We appreciate your support, and we remain available to continue to engage with yourselves, to the technical team from the Department of Trade, Industry and Competition as well as all the colleagues that have put this together. Our sincerest appreciation, and we look forward to continue to engage with all of you going forward on this very important subject. I will now hand over to the technical team for any announcements, if there are. But with that said, I would like to close this session of the event on the AfCFTA. Thank you very much to all of you.